Hey guys, what's up? So today we are going to start with economics contemporary issue, the first topic which is presented by me, that is Ayush Sanghi. Now this is about me that I am a chartered accountant. As you already know, I've taught at various reputed CSC study circles. We are trying to impart very high quality accessible education, as you know, Roman and Gaurav's initiative, Education Revolution, An Academy. Please visit us, message us on this Facebook page, official handle of Roman Seni Official. Coming to the first topic under the contemporary issue is India's biggest tax reform since independence. Since 1947, this is probably the biggest tax reform in the taxation regime of this country, known as Goods and Services Tax, GST. Giving you a little insight about Indian taxation regime, the Indian taxation is divided into two parts, direct and indirect. So GST will form a part of indirect taxation structure. Are you able to understand indirect taxation structure? Coming to the very first question, why does India need something like GST? What is the need for GST? क्या ज़रूरत है इसकी? The purpose of implementing GST is firstly, the current indirect taxation structure is full of uncertainties due to multiple rates. What do we mean by multiple rates? क्या मतलब होता है इसका? So right now, giving you just an example, we have many rates such as at the state level, we have VAT, at the central level, we have service tax, at the central level, we again have excise duty, central excise duty, surcharge on excise duty, cesses on the central taxes, customs duty, etc. All these taxes, they carry multiple rates. Along with multiple rates, the more the number of taxes, the more the forms. So it would become all the more cumbersome in case people have to use all these taxes with whatever they are producing. So all these taxes would be abolished and one taxation structure would exist, that is GST. So it would reduce the multiplicity of rates. The second purpose is due to multiple rates there are multiple forms. जितने ज़्यादा forms होंगे, it will introduce or it will increase the cumbersomeness of the entire taxation structure. So the tax compliances would be more, but the tax compliances would reduce because we just have one single tax structure, that is GST. Because of this, a lot more transparency would be induced, and the more the transparency in the taxation regime, we can increase and reduce tax evasion. By tax evasion, I mean the people who earn income and do not disclose, they tend to evade tax. That would be stopped because of GST. More than 150 countries have already adopted something like GST. What is GST? What is goods and services tax? The tax that is implemented on any kind of goods as well as services. So remember, goods as well as services. Earlier, what was there? Manufacture of goods attracted excise duty. The sale of goods attracted something like VAT or central sales tax. The provision of services, like what I am doing through this Unacademy channel, is that I am providing a service. So if I commercialize it, I will have to pay service tax. Now, this is leviable to service tax. This entire thing would be subsumed within GST, and GST can be defined as a consumption based tax which is levied when a consumer buys or consumes these goods and services. So please remember, it's a consumption based tax. Whatever you will consume in terms of a service, a lawyer service, a teacher service, an architect service, or any kind of good, you purchase a laptop, you purchase a cold drink, you purchase anything, you are paying tax on it. So GST will subsume all forms of taxes, and it was generally known as a consumption based tax. The importance of Article 246A, as is written over here, and the transfer of power to states. So why does the state government play an important role? State government, as per the state list, have one tax in their hands, and that is known as the value added tax. Central government has all other taxes such as central sales tax, excise duty, service tax, etc. Now, there will be a lot of resistance from the state government since VAT will be abolished as soon as GST is implemented. So, a need for a constitutional provision under Article 246A will transfer certain powers in the hands of state governments. So, let's see what it would state. the parliament and the legislature of every state, mind you, every single state of India will have the power to make laws with respect to goods and services tax imposed by the union or the state. So they would have the opportunity to chip in and to fix the taxation rates so that when VAT is abolished, they do not lose out on their revenue in terms of GST. So this is the importance of Article 246A. The taxes that will be replaced, or as we are saying, the taxes that will be subsumed when GST will be implemented. So implementation of GST would replace what kind of taxes? The taxes imposed by the union government, that is the central government. First tax, as I told you, is central excise duty. Second is additional excise duty, which is in addition to central excise duty. Third is service tax. Fourth is additional duty on customs, also known as CVD, countervailing duty, etc. All these duties will be subsumed except for something by the name of duty on customs. This is duty that is levied on any kind of import or duty on any kind of export. This is something that will continue to exist even after implementation of GST. I repeat, even after implementation of GST, the customs duty will continue to exist. All other duties, as we have mentioned over here, will be subsumed. So after implementation of GST, there will be GST rate and there will be customs duty rate. Now, the taxes imposed by state governments, first is VAT or sales tax, it will be abolished. Octroi, this is known as chungi in Hindi, or entry tax, this will be replaced. Purchase tax or any kind of state cesses, surcharges, etc., everything will be replaced, and one tax will exist, that is GST, goods and services tax. So you can see that all these taxes will finish off and one tax will be introduced, one single tax. So this would reduce the burden of the departments, the burden of the people who wish to deposit this duty, who wish to collect this duty, all the forms that have to be filled up, all the date of returns that have to be complied with. So the entire compliance procedure in a country like India, which is fully heavily loaded with 125 crore Indians, would be reduced, and it would be much more effective if the single umbrella tax is implemented. Now, GST will be administered by, this is a very welcome move and a very intelligent move by the India government, by a GST council. A council that will comprise of the Union Finance Minister as its chairman, Union Minister of State in charge of revenue or finance, and Minister in charge of finance or taxation, or any other minister, mind you, any other minister nominated by each state government. So you can see by each state government would constitute the council. So by including any minister by the state government, that would necessarily or most probably be the finance minister of the state, would also be a part of the GST council. So as you can see, the state government's representation in the council is as much as the representation of the central government. So whatever decisions would be taken, they would be highly democratic, and they would result in the kind of spirit of our constitution will be maintained. So GST Council is a very welcome move. It will administer everything. So the objective of the GST Council is, first, that which central or state taxes would go in GST, as we had just discussed in the previous slide. All the taxes such as central excise duty, VAT, sales tax, etc. would go in this. Ye decide karega GST Council. Second, which goods and services are subject to GST. So something like the items that are made of khadi are exempt in certain states. So they would specifically specify that which items will be leviable and which items would be exempt. And the other items that have particularly to be exempted are excluded. So that is in our next slide. Third is that at which rate and on which basis the GST will be decided. So there have been many rates that have been thrown out. Do not consider any of those rates unless there is an official announcement. One rate has been 16%, other has been 23%. Uske baad there has been a rate at the rate of 26%. So all are still proposed. There is no single rate that has been given officially by any of the ministry or any of the parliamentary committee. So do not go by any rate. This will be decided by the GST Council when the GST is implemented. And as we have just seen, the composition of GST Council, the voting strength will be divided in this pattern. 1/3 vote of the central government and 2/3 of the state government. So you see that state government has more voting power, and any resolution or any decision that has to be passed, it needs at least 75% support. 75% support from this entire council. So as you can see that it is highly democratic. Very welcome moved. It is highly democratic. There is also a provision of having a DSA or a dispute settlement authority. So it is self-explanatory that a dispute settlement would be administered by this authority. Dispute between whom? Dispute between the center and the state. So as we just understood, that state governments would lose out on the revenue of VAT, which was under direct control of the state government. Where as soon as they will lose this out, they will get a certain share in GST. If they are not happy with their share in GST, so they can file a complaint with the DSA, and the DSA would come out with a resolution or with a solution in order to keep the state governments happy. So in addition to GST Council, another body that has been proposed is a DSA or a dispute settlement authority that would resolve disputes between the central and the state government. Any kind of appeal from the DSA would directly be dealt with the Supreme Court. As you can see, the Supreme Court, which is the authority that is the custodian of the constitution, and under article 246A it will take the custody of any kind of dispute occurring between the center and the states. A very, very good move, highly democratic in terms of DSA. The exclusions, as we had discussed in the earlier slide, now these things that have been particularly excluded from the ambit of GST. Earlier, these goods, some of these goods were taxable by the state governments through VAT or value added tax, which means that they will continue to be taxable by the state governments under value added tax even after GST is implemented. So these goods are something like petroleum, crude, HSD, high speed diesel, natural gas, ATF, aviation turbine fuel, and alcoholic for human consumption. This is vatable at the highest rate of 20% in every state. So, this 20% foregone revenue will not be foregone by any state government as this continues to exist within the state government's ambit, and GST will not include something like alcohol. Now, this is something again which has been proposed. It may or may not be there, but as of now, as we speak right now, this is excluded from the ambit of GST. The other important features of GST are, firstly, in case of supply of goods on interstate trade. Interstate trade means the trade between two states. So between Rajasthan and Gujarat, if things are being traded, if had they been sold within Rajasthan, that means from Rajasthan and to Rajasthan, within Rajasthan, it would have been called intrastate trade. Under intrastate trade, the state government gets VAT, value added tax. But when it comes to interstate trade, that is from one state to other state, the state of origination, that is Rajasthan, will get something by the name of CST, Central Sales Tax. This is a question that was asked in PT 2014, that who gets the share of the Central Sales Tax. So Central Sales Tax rate is decided by the central government, but from whichever state the goods originate, it gets to take the revenue of those goods in terms of CST. So it will lose out on VAT if there is interstate sale, but it will gain central sales tax instead of VAT. So in case of supply of goods on interstate trade, an additional tax would be levied at the rate of 1%, and this is the maximum that has been proposed. It will be less than this. This will be collected by the central government for a period of 2 years, first 2 years from the time GST is implemented. The amount so collected will be assigned to the states from where the supply originates. So as I told you, origination state, that is Rajasthan in case of our example, will get hold of this additional tax. So it means that although VAT will be subsumed in GST, CST will be subsumed in GST, but there is an additional tax of 1% only in case of interstate trade that will be chargeable over and above GST. So let's say GST will be implemented at 16%, and if the good that is leviable to GST is sold from Rajasthan to Gujarat, it will be leviable at 17%, where 16% will go between central and the state government, and this additional 1% will go to Rajasthan, in our case, state of origination from where this has originated. A very important feature only in order to maintain the satisfaction of the state governments at a high level. The benefits that have been derived from implementing GST, Very, very important topic. What are the benefits that have been derived from implementing GST? The first benefit is that it is a single and unified rate, a highly effective and efficient solution, as a single rate will subsume all the multiple rates and it will simplify, it will make it transparent, the entire indirect taxation structure for every person, all the individuals, all the companies, especially the multinational corporations or the foreign companies. For them, if we have a single structure, it will improve our ranking in case of ease of doing business in this country where our ranking had fallen last year. So a very welcome move to have a unified structure, the biggest advantage of GST. Second is that all the key decisions in the hands of GST Council, the importance of which we have already discussed in the previous slides. The representatives from both central and state government is in place, and states would have a say in implementation of tax laws in their territories. So all the tax laws that can be implemented in their territories, they will have a direct say. So there will be no resentment in case of this. And the lastly, we can say that full compensation for the first 5 years, again something that has been proposed. Let's see that this will be 5 years or 10 years in future. The state governments for any kind of revenue loss. So if the state governments was charging VAT earlier, that was coming entirely to it, it would lose out on VAT. So whatever will be the difference of losing out on VAT, that will be compensated by the central government after allocating them a certain share in the GST. So if GST is implemented at 16%, 8% will go to central government, 8% will go to state government. And the state government was charging VAT at the rate of 12.5%. They will stop charging this, they will get 8%, and the differential 4.5% as compensatory tax allowance will be given by the central government to the state government in order to maintain their satisfaction. This is proposed to be done for the first 5 years. For the first 5 years, all these four benefits would keep the satisfaction of state governments at a very high level. This was the entire topic of GST. Do not be scared of the Indian taxation regime. We would be coming out with many more videos on something like taxes and other contemporary issues. As you know that this is a part of the education revolution. So I am a small cog in this large wheel of education revolution, An Academy. So please like, comment, subscribe on this channel. You can mail to us on all these links that have been provided. You already know Facebook, thumbs up, Roman Seni official channel, Unacademy official channel. This is our Twitter handle. Spread this word, education for all revolution, and thank you very much for watching the tutorial.